How would you perceive the massive change in the whole investing landscape in just 2 weeks? It's quite something. Have we gone too far, too far? Have we priced in too much? Have we priced in too little? That's all for you to answer.
Yeah. Yeah, I think it's coming. Reopening, it's in the process. I think that now we see a lot of positive signs. We have news almost every day. So that's definitely drove up the market sentiment. And also we see especially now lots of policy announcement, not only at the announcement level, but there's a fully relaxing of this kind of lockdowns. And also I think there's no way the China will back to the lockdowns. So I think the direction is in the right direction. But we also know the road to the path to the reopening is bumpy. So we will also see, we now currently forecast maybe the peak, the first wave of the peak will be middle of the December till to maybe middle of the January. So for the coming days, we might hear more cases, the rising before it's kind of declining. So we think that yes, the market sentiment is very strong, and also it's already rallied to 20 to 30%. But currently our position is still neutral because of considering of maybe the bumping path in the coming months.
So what would it take then to push you from neutral to overweight? Given we've already heard a lot. What else do you want to hear?
Okay, so I think here it's more policy implementation. So we want to see some evidence to come back. So for the data, when the case really go down, and also we say the consumption pick up, because currently we say the consumption, especially for the service side, it's only 30 to 50% of 2019 level. So we expect with after the first wave, and the number will pick up, because now we see in China, for the different cities, actually the implementation at a different level. For example, for Guangzhou and Hefei are actually perform the best. So their service side is already back to the 80% of level. And Chongqing and, for example, Shijiazhuang, I think is still very muted. So I guess we want to see more evidence to come.
Wow, that's a lot of tracking of data, I'm guessing, that you're going to have to do, right? Where you have to basically check city to city.
Yeah. Big city from big city.
District to district, region to region. I just wonder, given we saw that the credit data that came out in November, where you're still seeing that despite the policy stimulus that's been thrown, credit demand is still quite weak out there. When do you expect credit to actually rebound?
Credits, in my view, I think it's because probably will gradually pick up for the coming months. I think that could be as early as December, because we just announced for the RR cuts, and also for more credit supports for the for the value chain of the property market, and also we also expect for the front loading of the LGB issuance is possible. So I think that's coming. So we think for the credit will gradually pick up until to maybe 10.3 to 10.5%, for the coming 3 to 6 months.
Well, the whole lockdown situation did create this vicious circle, if you will. Now, how do you convert that into a virtuous circle? You want, as the Politburo was saying, you've got to give, I think, quote is giving full play to the basic role of consumption, which has a lot of innuendo within it, does it not?
Yes, I think that this year, because for the GDP, it's already December, so we think it will be around 3%. So next year we expect it's 5% at least. So we think that for this year, for the consumption side, it will be around the 1% or less than 1%, because to the YTD data is only 0.6% till October. So we think that next year the consumption will be at least 5%. So for the consumption's contribution to GDP growth is 55%. So the additional 4% of the jump of the consumption could contribute additional 2% of GDP growth. So if we have a higher consumption growth, so maybe high single-digit growth, let's say 8%, so I think that we can reach a 6% easily. So that's the reason we think the next year's target could be set at more than 5%. Maybe the government will say we set a target above 5%. I think it's very likely.
We're seeing a lot of stresses in the fixed income space. Government bond yields have pushed up, credit spreads have widened onshore. What are you telling the wealthy clients of your bank as far as exposure to fixed income right now? Because things are improving.
Yeah, I think globally we are still favor like a more defensive strategy because like now we are talking about China. So for the global bonds, I think it's now for the fixed income actually can give like a very good high yield, and also at the same time for the stock market is still very volatile. So I think for the defensive fixed income strategy is not still or like a top choice. So for the China side, I think for the CGB, I think currently is also pick up. And also that could also attract some of like the investors, especially also given for the CNY like now appreciate against the dollar actually quite a lot. So I think it will become attractive again, like both for the bond market as well as the stock market.
So in terms of preferences with stocks, bonds, currency, what do you lean more towards now, and what are you recommending to your clients?
Okay, globally, we are more like defensive. We are still more prefer like for the fixed income strategy.
For China specifically?
For China specific, I think currently we are like in the neutral on the stock side, but we still definitely see the potential upside. And we also think that there's like opportunity for the neutral. That means we don't like buy. So I think that also not sell. I think that we closely monitor on the market, and also some of the investors already started. So for the fixed income side, we also say, because now with the government support, so for the IG bonds also continue to be like attractive, and also some triple B bonds actually become more attractive. So double B, I think that now with some of the the developers on the white list, and also become attractive. And for the single B, I think we are still very cautious.